Welcome back. It's time to set you up for today's trade. Our team of researchers are here with the trade setup, the stocks that are likely to be the budget beneficiaries, and of course the setup on the FNO side of things as well after yesterday's sell-off. And the kind of route that we saw yesterday, at one point the Nifty was down almost 700 points. You saw a brief recovery, but then again towards the final 30 minutes, that recovery got sold into very swiftly. Almost a 500-point cut now on the index. The Nifty Bank was down over 1,500 points, and PSU banks were the biggest laggards in yesterday's session. Now, what do you need to watch out for today? The first thing, of course, the FIIs being on a holiday yesterday, participation was lower. They would return in full force, so we need to watch out for that impact. The currency and the bond markets were shut yesterday, so they open for trading. They will react to those record gross borrowing numbers as well, so that keep an eye out for. And of course, if there is any further selling pressure on the defense names that got smashed yesterday, and of course on the railway stocks as well, so keep an eye out on all of these names. There is a lot of brokerage commentary that has arrived. Vivek will talk more about that. And of course, watch out for gold and silver because they remain extremely choppy. And at one point, silver prices were down 6% earlier this morning. They recovered. They traded positive with gains of almost 2.5%. And now again, they've given up all of those gains and are now trading 3% lower. Same is the case for gold as well. So keep an eye out on the domestic prices on the MCX, which also ended lower in yesterday's session. Also, as a result of which, keep an eye out on the metal names because those were the ones that sold off because of the reaction in these metal prices in the global markets. Now, the key levels to watch. Yesterday's low, 24,572, very close to the September 30 low, which was 24,587, and that becomes the first important level to watch because a move below that then opens up the possibility for a fall down to the August 8th lows, which is 24,337, and that is going to be that one important level to watch on the downside. The Nifty Bank has broken below all important levels. It's now almost down 2,000 points from record highs, so keep an eye out on that as well. 58,000 being the first level on the downside. The capital market names, they continue to remain in focus. There has been a lot of analyst commentary on this. You see if there is a reaction to that. There are earnings, so the focus will shift back to earnings with the budget being over. But of course, the reaction to a lot of this will be watched out for. The GIFT Nifty for now is indicating a subdued start for our own markets. It will be interesting to see how the day pans out. The implied open currently suggesting a 33-point uptick. Over to Mangalam now, who will tell you the FNO data from yesterday's session and the important levels that data is indicating. Mangalam, good morning.
Well, if you look at yesterday's data, there was a sharp fall. No two takeaways from there. The Nifty Bank, the broader markets, all of them saw a fairly sharp reaction on the downside to the budget. Thereafter, there was a recovery as well. But then towards the last hour of trade, we ended at around the 24,825 for the frontline index. And all of this meant that the India VIX had to surge. And that's exactly what took place. The India VIX surged about 11% at around 15.1. And the market breadth as well would make your portfolios feel a fairly deep shade of red as against green. 2,000 stocks in the red for about 1,000 stocks in the green. But all of this was on very low volumes. Why do I say that? Because the FIs, while on a net basis they sold about 588 crores, the gross selling was just about 1,200 crores. That's roughly 1/10 of what we usually see. So it was a Sunday, no FII trading activity that took place. Yes, there was some DII volumes. The net sold about 700 crores. But remember here as well, because of the absence of a counterparty, the gross volumes were about 20 to 25% lower than what we see on an average. So volume returns in full flow in today's trading session. But be that as it may, the FIs did not shy away from selling once again in index futures. Close to 1,600 crore worth sale and around 9,500 short contracts is what they've added. So their longs maintained still at a very low 12% with net contracts moving over 2 lakh contracts. So which is a little on the extreme. So let's see where it goes from here on. And the other thing which is on the extreme is a massive call writing that we saw. Nearly 3 lakh calls written for about 50,000 puts. So for every put that the FIs wrote, they wrote 6 calls telling you that the way on the upside would see a fair amount of supply were the markets to see an up move in today's session as well. But the other extreme is the put call ratio. Typically, we speak about it being oversold at 0.7. Guess what? It's moved to about 0.59 and the expiry is tomorrow. So it will be very crucial to watch how the market behaves in today's trading session. The options levels, 25,000 and 24,900 calls. Both of them very active, telling you a little over that 25,000 mark. We will continue to see some supply. But at lower levels, because of yesterday's low and the rebound, 24,500 put writers are fairly active for a premium of 60 rupees, telling you around 24,450 or thereabouts could be important support. So 24,450 to 25,100 is the broad range that the options data is indicating. And if you look at the technicals as well, that tells you that that broad range is likely to play out. Yesterday's low of 24,571 and the 200-day moving average of 25,209. But today will be a more crucial, important reaction to the budget than yesterday, which was one, knee-jerk, secondly, on low volumes, and thirdly, no FII activity. So let's see how that pans out today.
The two most important levels of the day were just on your screen a few minutes ago. Mangalam, thank you for summarizing that for us. A whole host of stocks are also in focus amidst these budget announcements. Vivek is here with that entire list. Vivek.
Well, that's right. Thank you so much, Harmas, for that. What we've done is overnight pass through the entire budget document as well as seen a whole host of brokerages, what they've had to say as far as how they're reading and how it will impact sectors as well as individual stocks. So the first set of stocks on our radar, or the first sector, has to be the IT pack, clearly positively impacted. The buyback that IT companies generally do will now be treated as capital gains. Buyback will be taxed at 12.5% to 20%, depending on whether it's long-term or short-term for the non-promoter entities, and for promoters it will be at 22% to 30% for corporate or non-corporate shareholders, depending on which category it is. So clearly a positive as far as the IT pack is concerned, one of the few relative outperformers in yesterday's trading session. Now coming to the core capex and the segments that will be impacted there, defense, roads, railways, the entire set of packs. Now most brokerages have highlighted that the core capex has actually positively surprised. Core capex growth has come in as 14%. Versus 6% in the budget estimate for FY26. FY27 budget has positively surprised, with road rails seeing almost 8 to 11% growth versus the no growth in FY26. Defense budget is up 18%. So expect most of these stocks to react positively today. The next set of stocks has to be the power financials, power finance as well as REC. They've once again said that they will restructure PSC as well as REC. So what they're saying is that the PSC holding company discount can go away if entities are consolidated. The next set of stocks will be the entire pharma pack. Biopharma Shakti scheme with an outlay of close to 10,000 crore has been announced. Next set of stocks will be PhonePe as well as Paytm. They've reinitiated UPI incentives at 2,000 crore for FY27. They've sharply revised FY26 allocation upward to 2,200 crore versus 440 crore in the original budgeted estimate. Moving on, going back to you.
Vivek, thank you for summarizing that for us. It's a long list, of course. We'll get you all of that on our website, cnbctv18.com as well.